All right. Hey, guys, it is time for the Sunday review so you can have the best chances of not getting killed this week in various futures instruments. We're going to look at crude oil, gold, silver, the dollar, Nasdaq, a few currency pairs, all through the lens of Elliott wave. But also, we're just going to give you some parameters and try to keep it very simple. Now, almost all of my parameters are derived from Elliott wave work, but at the same time, so often a much simpler method that Armando employs lines up very similarly. So the real advantage of Elliott wave is to give you the projections. So if price moves beyond the initial parameters at Armando inside of the Professor Trades Club, when levels move beyond what he is originally showing, then the Elliott wave uh, methodology really helps because it can give you projections, extremes in either direction, in addition to the parameters that it gives. All right, enough of that. Let's dive into the crude oil chart, and then we're going to work our way through the other instruments. All right, here we go. So looking at the daily, I'm going to give you a quick overview of a much larger picture in crude oil, which will just hopefully give you some context. So after the COVID low, we came rocketing all the way up to 130.50. This is a continuous futures contract, continuous futures contract. Then what we have, I think, is a working on finishing a five-wave structure to the downside, and then we'll get a rip-roaring rally in crude oil. So the idea is three waves down for one, wave two, three waves down for wave three. This is trading as a diagonal, which means it's moving in threes all over the place. So then this is where it gets crazy when the Elliott wave stuff comes in handy. It is possible this is wave four up here. I have it over here just to remind myself that this is possibly a diagonal, which I haven't labeled on this chart. Because to my wave trading, it doesn't necessarily matter. It's just sort of an academic thing about Elliott wave. Um, every now and then I do see folks putting it like an ABCD on their chart. It has nothing to do with Elliott wave. But in terms of a diagonal, A through E could be an Elliott wave diagonal, something like this. Okay, and whether that is what it is or not, I don't really care, because the bottom line is it came down and took out these lows after it topped right here. Some guys with Elliott wave, they'll put the four there, or you can measure the four there. Again, that's rather academic, but I just wanted to show you the idea that this is possibly a triangle. Okay, it's contracting triangle in wave four position, which is where you can see a wave four. That makes sense. So then, because I'm tracking this whole thing as a diagonal, which just means to say it's moving in threes. So wave one down should be composed of three waves. Well, yeah, you got three waves, and it comes right to this yellow fib level, which is one of the common fibs for a three-wave move to strike. And if you've been following me, you understand that I almost always put those in yellow. The 100 fib, the 1236, or the 1382 are common targets for a three-wave move. In this case, I'm looking at as an ABC of wave one of a diagonal. Then eyeballing it, you can see this is another three-wave move, which is what you'd expect, calling that a wave two. And then now we've begun maybe another ABC move down for wave three, which is why I have these yellow fibs down here. But listen, the way we're trading, we're day trading, scalping. I don't necessarily need to know all of this, but it gives me context of what am I looking for. So the other takeaway from this daily chart of crude oil futures is that price, once it topped, it has just been coming down and crisscrossing itself and overlapping itself, going nowhere, right? The range that crude oil has been in ever since it topped, right? And once it initially came down, just call it this. Let me just put a box around it so you can see what I'm talking about. It's basically this range. Crude oil is just chopping in a range. That's what it's doing. It's going nowhere. Well, this is fantastic if you're in Armando's club and you're a day trade scalper. Otherwise, you're probably losing your mind if you're just trying to trade, or if you're trying to trade oil stocks or indexes based on oil. And this is chopping around. And what most amateurs do is they see it going up and they go, okay, I guess I'll finally buy. Then it goes down and they get stopped out. They go, well, I guess I'll short. And then they short it down here. Then it goes up. I mean, this is a recipe for getting destroyed. But not if you understand what you're looking at in context, and that's where Elliott wave is so great. So this is chopping in a range. So there's a bunch of different ways to think of this, but I'm going to keep it really simple. I'm going to keep it moving. So here you can really see the range. Now look, I flipped to the January contract. I had been in the December contract. I'm not going to recreate all of the minutia that I had on this chart. I created some of it, but really, this is where the action is. And as a day trade scalper, this is what I'm interested in giving you right now is parameters. So, and by the way, this is the January futures contract CL. Data feed is coming from the NYMEX. You can see it up here on my charts. So this is the NYMEX data feed of crude oil futures in the January contract. That might explain why some of your numbers are different than mine, but this is WTI crude oil. All right, so 72.41 is a line in the sand for the way I think of it initially. For the next potential short idea, it's got to get rejected starting now. Maybe it already topped, but certainly inside of this box. If it comes up and gets above 72.41, something else is going on, and I'm going to have to revisit these. But for the purposes of this video, let's keep it simple. Let me just give you some parameters. So this is a 4-hour chart of the January futures contract of crude oil. This is a ratio box. I'm looking at this. Let me put the labels on here because I'm not going to go back and talk to you about all the minutia that's happened before, but this is chopping in a range, and sometimes it's moving in 3 waves, sometimes it's moving in 5 waves. I happen to think this is moving in 5 waves. Why would you care? Well, because if it is moving in 5 waves, we are very nearing a termination point in the 5th wave. That's why I care. Is it, is it moving in 3s? Is it moving in 5s? I mean, overall, the larger structure is absolutely moving in 3s. So internally, if you see a 5-wave move, I'm always viewing it as part of a larger correction. In most cases, a 5-wave move is either going to be an A wave or a C wave. In this case, I'm viewing it as a C wave. We are still inside of a potential B wave triangle, but without getting all crazy into the weeds and the minutia and confuse you, let's just stick to the parameters. So you're looking at the parameters right here on this 4-hour chart. And we have just tagged what I would consider the minimum for rejection, and it did get rejected there just ever so slightly on a 4-hour chart. So somewhere in this box is where, if this is correct, and this is finishing off this move up as a 5-wave move of some kind of a C wave. Maybe it could be a bunch of different things. So I don't want to waste time getting into what it might be and could be and all that. I'm trying to give you actionable levels to trade against, and also parameters to be warned about. So the first warning, for if you are going to trade the short side, I think the first warning would be if you get above 72.41 on the January contract, then I think it's more likely that we're going to keep going higher if that happens. Otherwise, I'll continue to look for rejection up here. Okay, so these parameters, you can see these parameters. Let me zoom in. I know some of you guys are on smaller screens. So let me zoom this in and enlarge it just so you can grab the levels. These are the price levels, okay? So either it's already topped, which I don't think so, but that's just my opinion. Who cares what I think? Certainly 69.16 is an important level. That's been an important level. I've been talking about that level quite a bit. So clearly below there, and it's coming down. You can see I got this part right, that we came down, and it did catch the bottom of this pivot, but then it's creating what I think is 5 waves up. So I'm viewing that as a C wave. So whenever this finishes, I'm going to expect it to reverse and come down again. So let's drill down to so look, before I drill down, look at these levels. Okay, 72 even is the top of this ratio box. If this is going to follow a standard 5-wave proportions, then this is where you would expect a 5th wave to terminate. Maybe that happens Maybe that happens this week. Maybe it happens the first 2 days of the week. Maybe it comes up, and maybe by Tuesday morning we're topping, and then we look, I'm just saying that. Let me throw some timing fibs on here actually, real quick. So what I like to measure is I look and I've got a template. Yeah, this is about right. So I would just move this arrow over, because if price makes it above that line in time right here, which is Tuesday, that's Tuesday, this coming Tuesday. If price gets above this line, uh, uh, certainly after Tuesday at, what is that, 4 p.m. So you've got between now until Tuesday in terms of standard timing to see if this thing can top out right in this window. If it can top out right in this window, that would be ideal. 69.14. I'm just trying to clean this up a little bit. All right, something like this. As long as it stays below there, it could chop around in here and burn a little more time off the clock. But that's what I'm looking for. And then if we drill down one more level, now I filled in this with a little bit more detail, a little more fibs. And really the way this looks on these lower time frame fibs wouldn't be out of the question for this to come all the way up to the max standard, because there's some confluence up here on both degrees. I'm not going to get in the weeds. I'm just giving you parameters. So again, 72, slightly above 72, 72.10, somewhere in here, 72.16. This is one very interesting area. And another area that's interesting to me internally, if this is a 1, 2, as a diagonal, 3, 4, and then we're about to finish off this wave 5, it'll still be inside of the ratio box, but maybe it terminates there at this fib, the 1382 of this internal structure. Now, let's see, 1, 2, just for grins, I don't want to burn up too much time, but what I'm doing right here, and I know this would be as a diagonal for the 5th wave, 70.23. I'm just trying to give you one more. This is a ratio box on just this 5th wave. I'm curious where this lands. So that happens, the top of that ratio box happens to land right at this 200 fib, which is really lining up inside of the ratio box. So you know what? The way you would trade this, because I know a lot of traders, they wanted me, not just me, but anybody that's running any kind of methodology and somebody's looking in on the methodology, they want exact levels, they want predictions of the future. Unfortunately, markets are nonlinear, complex systems with all sorts of unpredictable aspects to them. So the best you're going to do is come up with zones and probabilities. So if this is a 5-wave structure, and I didn't label it, I'm sorry I'm spending so much time on crude oil, but hopefully you're learning something. This is the 5-wave structure at this scale. I'm just going to make it white to make it a little easier. But this would be the idea. If this is going to top out and we're going to get a pullback that's tradable, okay, we've got good parameters, very good parameters actually, because this does look like 5 up for wave 1. This is of C, right? So a C wave should be composed of 5 waves. I'm talking about this C wave, and we're just looking at the inner details. 1, 2, 3, 4, 5 for wave 1, 3-wave correction for wave 2, 5 up for wave 3, 3-wave correction holding the blue box for wave 4, did not overlap the top of wave 1, which is one of the Elliott wave immutable rules, one of the few hard and fast rules of Elliott wave. And then now we've got a potential 1, 2, and now this could be either the 3, 4, or this could be the 3, 4, and it could be a diagonal. Either way, if this is going to top out, it's going to be somewhere in here. So up in this box. So one way that you could play this is wait for this to come up and stay as small as you can and just set some open orders to sell up in here. So in other words, be patient and wait for this to come up. The first real level, viable standard level is 71.63. This is the front month contract, which happens to be January. Actually, I guess I didn't. Yeah, this actually is the January contract. So 71.63 would be the first place to reasonably put in a short. And then if it wants to keep coming another 20 pips, there's another short idea, another fib on the internal structure right there. And then the max that you'd want to see is up here in this cluster of fibs. There's really 3 different fibs up here. So I like that overall, as if you're going to take your biggest position, it should be up here. So go tiny here, still small here, but then go, if you actually see it up here, and I don't mean if it comes way down here and then it goes up. I mean if it holds really, 1, 2, that is, I mean, there's a good way to do it is just always notate the top of wherever wave 1 of whatever nano degree. In this case, it's right there at 70.53. So a downside parameter is 70.53. An upside parameter, just call it 72. I know that's $1.50 range, but that's the deal. So if you're trading futures and you want a day trade scalp, let's see what happens Sunday night, overnight, and then into Monday morning. 7 a.m. Monday morning is right in here. So let me just, I like to start looking at the markets at around 5:30 in the morning, and I do notice a great deal of the time I get good clues around that hour of the day. All I'm trying to do is move this box over, but it won't let me grab it. I'm just going to put this at Monday morning at 6 a.m. And I'll put this one at around 4 a.m. It's just general guidelines. So let's see if it were going to come up there, I wouldn't be surprised if it does it all through the morning and gets in there into the afternoon session, and then it can sell off. It will go sideways all evening and all night, and then hopefully start coming down. So that's the idea for crude oil. That's what I'm looking at. Now, there are other possibilities, of course. Anything can happen, but I'm not getting into that. There's your parameters. Try to keep this moving. Crude oil. Now we're going to switch over to gold. Maybe this was the B wave. I remember very clearly thinking that's not really high enough to be a B wave, but look at the reaction that it got on this initial move down. So I thought, well, maybe that is a B wave. Thinking, well, okay, so if this is the first wave down, the initiation move, this should hold as a wave 2, but it didn't. It overlapped, nothing standard happening inside of here. And then now we are back up, and then we got rejected again. So I'm still going to look at this as a B wave and a solid parameter for gold. This happens to be the February contract. Very obviously, this top is holding still as the top. So if you get above there, something else is going on. I said many times, I don't think this is enough for all of wave 4 because it didn't burn enough time off the clock. Now I have flipped to the February contract, so you don't see all of my markings that have been on my other daily contract, but I just want to make sure I keep up on my contract switch. So when you're following along with me, you know exactly what I'm doing. Okay, I'm in the February gold contract. So again, I have no choice but just to trade and to do the analysis on what I'm seeing based on Elliott wave, which is that this is a B wave. I thought it was a B wave here. It's still a B wave. Sorry. If you want exact predictions, you want me to tell you exactly what the future is going to do, you're talking to the wrong guy. I'm just giving you levels and parameters. And if you're inside the Professor Trades Club, you know we're having some pretty amazing trades. So that's the longer term daily chart of gold with the ideal target down here in this blue box. Let me just make these brighter. For myself, I don't like them so bright, but I know if you're watching on a small screen. So ideally, you're talking below 2450. 2450 is a reasonable target for wave 4 to finish. There are other possibilities, but look, let's just get down to something more actionable. So it's possible this is working on 5 down. This is, I said the same thing over here, but did it really finish it? Debatable. So, but then all the way this price action unfolded, it was overlapping, very corrective. But then it finally got a shove up here but then it got rejected again. And that's when as this was behaving the way it was, I kept looking over here to give myself a reminder that as long as we're in these yellow fibs and below this high, we're still in B wave territory, which means we are looking for 5 waves down, which we were originally looking over here. This could have been it. And this would have been a very nice 3-wave move up, but then, and it even started moving down, but then it just started chopping and crisscrossing. That is indicative of a B wave, because a B wave, similar to a wave 4, is an overlapping, corrective, gorpy mess, and it's variable. Wave 4s are variable. They can morph into something more complex. So can B waves. So the best thing I got is now we're dropping down to a 1 hour, 55-minute chart, because that's a Fibonacci number. And so and I did the same thing over here. I'm doing the same thing here. I'm looking for 5 down, followed by 3 up. So the best thing I can do is give you parameters. So here you go. Let me enlarge this area for you guys on a smaller screen. In gold, this is possible. Maybe it gets a few more squiggles lower. It doesn't need it, but maybe it does. Get a little bit more squiggles down. What I'm going to do, we'll see what the open does tonight, Sunday night. But the idea is to go long in this box and then look to at least 26.96. Again, this is the February futures contract of gold data feed coming from the COMEX February contract gold futures. And buy here, look to come up at least to 26.96. Ideally, it comes up further and retests this zone up here, and then continues much lower for a proper wave 4. So all I'm tracking on this little minutia right here, looking for 5 down, 3 up into resistance. So I want to be long coming in early this week. And I have parameters for where I'm going to be wrong if that's going to happen. If I'm going to be wrong, I want to know where I'm wrong. See, look, a lot of you guys, and I know that there's some of these guys in Professor Trades Club, everybody wants to be right. I get it. It feels good. You're right. You intellectually discovered something. You put it in the room, and then you look, everybody, I'm right. I'm right. I mean, I did that for a couple of years before I figured out that it just doesn't matter if you're right or not. What you want to do is know, why are you right? Where are you right? And you really, what's even more important than being right is you want to know where you're wrong. How are you going to know where you're wrong if you're always biased looking that I'm right, I'm right, I'm right? No, you're not right. The odds of you being right all the time are extremely low. So what you want to do is you want to make money, right? Do you want to be right, or do you want to make money? Because those are two different things. Okay, so here's what I'm getting at. If I'm wrong, 1, 2, 3, 4, 5. If I'm wrong, this is going to keep coming, but I'm going to know where I'm wrong. If this comes down and gets below 26.50, really 26.46, if this keeps coming, I think it's going to make it down to this next level, 26.11. So if if that's the case, then I'm looking at where I have the 3-4 is potentially really a 1-2. In other words, this is 5 down to here. I'm looking right now for 5 down to here. And if I'm right and this comes down 5 down to here, it is going to bounce. And it's very likely going to bounce to at least 26.96, and I think more realistically 2,700, somewhere up into here. Okay, so if I'm right, we're going to scalp to the long side and make a bunch of pips over here. If I'm wrong, it's going to keep coming, break 26.50, and then hopefully, with any luck, if it does break this level down here, it'll back test, and that's where I'll short it, looking for this next zone down here with an ultimate target over here at 25.72. And we'll cross that bridge when we get to it. So for right now, these are what I would call the actionable levels of knowing where we're right and knowing where we are going to be wrong. So I don't care if I'm wrong. I want to know where I'm wrong. And it's always going to be based on fibs. I don't know a thing about fundamentals. All right, so that's gold. Silver, let me just cut right to the chase. Not too dissimilar from gold, although I'm viewing silver as slightly further along than gold, in the sense that I think it is likely silver may have bottomed already, because I can get 5 down here, and it actually extended a bit. And if I'm wrong here, it's going to be very similar to how I'm wrong in gold, in that it's just going to keep coming. So, and then something else is at play. We're already in a wave 3, and that perhaps this is a very small 1-2 here where I've got the 3-4, which is not too unlike what I was just saying in gold. Although I got to say, the action and the way this bottomed on Friday down in here, and then it's kind of popped up and is going sideways, just consolidating. I kind of like it. So that's why I put on a small long trade. And all I would be doing is very easily taking gains quickly and having multiple positions so I can maybe leave a runner on to see if it's going to, how high is it going to come back up. And the idea would be in silver, just like gold, we are working on a C wave. Similar to gold, but I don't think of them as correlated because I'm a trader, day trade scalper. So I don't really care about your correlations. I'm trading each chart on its own. All right, Nasdaq. I finally spent an hour this morning, much to the chagrin of my children, who were asking me why am I on my computer on Sunday morning. Fair question, but I'm just going to skip through this. Okay, I'm not going to. This is a 4-hour chart of Nasdaq. Nasdaq is extremely difficult for me to track. I'm sure I'm not the only one, but what I'm looking at, without explaining all the guts of it, if this thing wants to come up higher, then I mean, I know it sounds crazy to be talking about 22,400, 22,444. Okay, it could have already topped for all I know, but let's drill down on a lower time frame. So, like, is that the top? Yeah, maybe it could be, but I kind of like it better. I kind of like it because of the way, look, just look from here over A, B, C. So I've told you guys a lot. When I'm tracking a 3-wave move, I'm using these yellow fibs, 1, 2, 3, 6, 1, 3, 8, 1, 3, 8, 2. So look at that. The 1, 3, 8, 2 does coincide very nicely with the ratio box I've got up there, which also coincides with this internal structure of this ABC. See, I'm tracking two different structures here, but there is some confluence. That's why I'm thinking Nasdaq is not done yet. But who cares what I think? Where would I be wrong? All right. So clearly, if it just goes up from here, fine. Then I think it's going to go higher to those other fibs higher. Okay. But if it wants to come down, it did not finish the gap. This is where you'd expect rejection just based on zones. So I would love to see it come down, close this gap, and keep coming a bit, and then somewhere down in here, hold these levels, or somewhere down right in here. Actually, I don't even like that 618. I think that's a little too shallow. So, but we'll dial this in. But I have a potential bias to be short. So, you don't want to see it come back and get above that last high if you are going to play the short trade. And an ultimate target, ideally based on this larger structure. By the way, everything I just showed you is just this little tiny little structure right here on the 4-hour. And here's the B wave down here in these yellow fibs. Let me make those brighter. Now, that's the 4-hour chart, but you don't need to strain your eyes because just look over here on this chart. This is what I was just showing you on the 4-hour, but here we're looking at a 21-minute chart. So come down, close the gap, keep coming. All this liquidity over here. Keep coming down, grab all that liquidity somewhere down into here, and then rip one more wave higher, to get back up into here, 22,444 on the March contract. Okay, so the parameters are very easy. It's the last high, on this contract. It's just call it 21,900. And then the last low, which is not finished the gap yet, but that parameter is 21,666. That's kind of cool. 666, 900 to the top, 21,900, and 21,666 to the downside. If it breaks that level, ideally it keeps coming. And there's a B wave here, so it's going to be variable. It already is kind of variable and difficult to count. But anyway, that's what I'm looking at. Nasdaq, dollar. Same thing I've been saying. I think it's a B wave, even though it's coming back higher. The $1 million question for the dollar is how much strength is left in the dollar. We had a downside setup. It has all but invalidated now. So big deal. What does that mean? It just means that maybe the B wave needs to come up higher. Is there room for the B wave to come up higher? Absolutely, because When this thing first hit that 50% and started getting rejected, in the back of my mind, I'm like, 50% is not really where you'd see a B wave, even though this structure is certainly overlapping, gorpy, and a mess. It's a net gain of 0, up, down, up, down, up. It's just, it is consolidating up here. So let's take a closer look at some parameters. They haven't changed much. This is possible that this was just 3 down to right here, and that this is impulsive. I must say, this does measure okay as an impulse, and is holding, these are the parameters that I've had on here since this low. I've adjusted them a few times when it made this low, but the idea is if the dollar is going to resume strength, it is knocking on the door. And I think if it's going to come up from here and get above all of this resistance, then I think it is going higher in a B wave. I mean, look, it's already came up right between there. So if it's going to come higher, why not really make it a legit B wave, which a legit B wave to me is 764 to 886. So you can see if the dollar wants to be strong, if the dollar wants to be, if the dollar wants to be strong, 111, 113 is not a unreasonable target for a B wave. That question mark has been there for a minute, but now I'm going to actually move the label up there because I think the odds have shifted since we poked above this 618. And then it held this box as a potential pullback, potential wave 4. So even though B wave is not going to be composed cleanly of 5 waves, this is moving higher impulsively. That's all I can say. As opposed to this stuff, which is overlapping, moving in 3s. All of a sudden, this is not overlapping as much, and it's moving. You can see that it's just making higher highs the whole time and higher lows. Higher highs, higher lows. Just simple. You don't need Elliott wave to tell you that. So I am using Elliott wave on this weekly chart of the DXY because I think that's giving me the most clarity. And then this chart, the 2-hour chart of the DXY, is giving me the parameters. So there you go. And this is going to be very impactful right here of what happens. Because if it's going to lose it, it's going to lose it this week, I believe. If it's going to just keep coming, it's going to get above 107. And at some point, you're going to see, I think, a large 2-hour candle, 4-hour candle to the upside if it gets above here. Okay. Not good overall for general things with a strong dollar is bad. So this is the last chance. And then because we just looked at the dollar, all of this stuff is beholden to the dollar. Here's the Mexican peso against the dollar. If the dollar breaks out and keeps coming, this is coming down to this box. I'm sure of that. So here's the Canadian dollar against the U.S. Canadian dollar pair. Kind of similar thing. It's just going to depend on what the dollar does. EU, same thing. If the dollar wants to just go for it, then this is going to come down. And here's the target down here. Okay, it's all about the dollar. Same thing here. If the dollar is going to keep, now this one is interesting because this is sort of a little bit in reverse from the other ones I'm showing you. If the dollar does get weakness and drop, then this chart is looking really good for a 5th wave completed down here for some kind of a bottom. But I can't even say that with a straight face because my bias is a dollar. My bias is a dollar's going higher now. It's going to resume some strength for a bit of time. Okay, which would also coincide somewhat with the idea that metals are coming down. Even though I don't trade correlations, I don't follow correlations, but as I'm looking at the dollar, thinking that if the dollar breaks out and is going to give strength, typically metals don't love strong dollar. Although I've seen plenty of times where the dollar's going up and the metals are going up. So why did I even mention it? Because I know you guys are thinking about that. Maybe that's why I mentioned it. I don't factor that into my trading. I just am commenting on it. It means nothing to my way of trading. So next one, same thing. Well, EJ, what's going on with the Japanese yen? This is the question mark I put on there when it bottomed, and the question got answered. We were right there at that level, the 618 of this bounce. So what is going on with EJ? is it gonna, was this all of wave 5 or was this just a wave 3? And this is wave 4, and now we're about to come back down. You tell me. This is a key area right here in UJ. Yep. Key area in UJ. GJ, similar thing. We longed it. I'm out of there. I'm done. Can it come up higher, a little bit higher into this box? Yeah, sure. Yeah, interesting. Both of these are looking like shorts or another shove up into the box and then short. Now, look, forgetting any correlations and forgetting the actual pound and the Japanese yen, only looking at this chart, this is either some kind of a diagonal to the downside as wave 1 of a diagonal, and that we were coming up and is going to get rejected and resume the downtrend. And if it keeps coming, then I'm just dead wrong. And this is some other kind of structure that I am not accounting for. But as of right now, I see this coming down. It's just a question of, has it already topped, or is it going to come up higher into that box? Just based on the overall structure of GJ 2-hour chart, either it's already topped or it's going to come up higher into this box before it gets rejected. All right. We're looking at a weekly of UJ and dialing in a tiny time frame on UJ. So here, similar thing, B wave, is that all the B wave? Is that the top? There is room if this wants to come up more. There are fibs here. There's more depth in the ratio box. There is a couple other fibs up here. So this thing needs to get rejected pretty soon. This thing needs to get rejected pretty soon. I mean, this is really there. It's also, there's a 618. So somewhere in this area, you could be scalping short on the UJ. If you're inside of the Professor Trades Club, you're going to be getting alerts for whatever currency pairs he sees for good scalp entries in either direction. All right, guys, there you go. I've covered a lot. I try to just breeze through and give you actionable levels and parameters. If you like what you're getting, please smash the like button. If you really want to get notified, hit the subscription bell. To all you regulars, thanks. Appreciate your time. Appreciate you watching. I'll see you in the Professor Trades Club. If you don't know what I'm talking about, the Professor Trades Club, it's Armando in Miami. He's the Professor Trades. Got a club, less than $1 a day. Come in, revolutionize your psychology, revolutionize it. No more playing games with yourself. Make consistent gains. Get in, get out, grab the bag, go home. Day trade scalping. Nobody's as good as Armando. For less than $1 a day, it's a no-brainer. The link is down below in the description of this video. And you get the Elliott Wave stuff included in the price. You buy the Professor Trades Club, you're getting the Elliott Wave stuff in a separate room inside of his club for free $99. Cool. All right, guys, see you in the room. Thanks for watching. Bye-bye.